Have you ever wondered why that shiny yellow metal we call gold has captivated humanity for centuries? It's not just for pretty jewelry or dental fillings. Right now, something massive is happening behind the scenes in the vaults of the world's most powerful financial institutions. Central banks are on a gold buying spree, the biggest we've seen in decades. What do they know that we don't? And more importantly, what does this global gold rush mean for your wallet? Stick around, because we're about to uncover the secrets behind the great gold hoard of the 21st century. So, what's the big deal? Let's look at the numbers. In the last couple of years, central banks have bought record-breaking amounts of gold. We're talking hundreds of metric tons. It's not just one or two countries either. It's a global trend, with nations from China and India to Turkey and Poland beefing up their reserves. This isn't a random shopping trip. It's a calculated, strategic move. For decades after the end of the gold standard, many central banks were actually selling off their gold. Now the tide has completely turned. They're not just buying, they're hoarding it. The big question is, why? To understand the why, we need to think like a central banker. Their number one job is to ensure economic stability. They hate uncertainty. And what have we had in spades recently? Uncertainty. We've seen a global pandemic, geopolitical conflicts, and stubborn inflation that has eroded the value of currencies worldwide. When the world feels shaky, central banks look for an anchor, a safe harbor. And for thousands of years, gold has been the ultimate safe haven asset. It's a physical, tangible asset that isn't tied to any single country's government or economic policy. It's like the financial world's emergency insurance policy. One of the biggest drivers behind this trend is a desire to move away from the US dollar. For decades, the dollar has been the world's primary reserve currency. This means international trade, from oil to coffee beans, is mostly priced and paid for in dollars. Holding dollars gives the United States significant economic and political leverage. However, recent events have shown the risks of being too reliant on any one currency. By buying gold, countries are diversifying their reserves. They're essentially saying, we don't want to put all our eggs in the dollar basket anymore. It's a quiet but powerful shift in the global balance of power, a move towards a more multipolar financial world. Think of it this way. If your entire life savings were in one company's stock, you'd be pretty nervous if that company started having problems, right? You'd want to diversify. That's exactly what these countries are doing on a massive scale. They are reducing their exposure to the US dollar and, by extension, to U.S. economic and foreign policy. Gold is the perfect alternative. It's universally accepted, holds its value over the long term, and no single government can print more of it. It's the ultimate financial neutral ground. This shift is sometimes called the dollarization, and this gold-buying frenzy is a major symptom of it. But it's not just about geopolitics. It's also a hedge against economic trouble at home. We've all felt the pinch of inflation, where our money just doesn't stretch as far as it used to. Central banks see this too. When governments print more money to stimulate their economies, the value of that money can decrease. Gold, on the other hand, is a finite resource. Its supply doesn't suddenly increase because a government decides to print more. Historically, gold has proven to be a reliable store of value during times of high inflation. So, by adding gold to their reserves, central banks are protecting their nation's wealth from being eaten away by inflation. It's a defensive move to preserve purchasing power for the long haul. So, we've established that central banks are buying gold for safety, diversification, and as a hedge against inflation. But what does this mean for the global economy? Well, for one, it signals a lack of trust. It suggests that the world's most informed financial players are bracing for more economic turbulence. When the captains of the financial system start stocking up on lifeboats, it's a good sign that they see stormy seas ahead. This can create a self-fulfilling prophecy. If everyone believes the system is fragile, they act more cautiously, which can slow down economic growth and investment. Furthermore, this massive demand from central banks has a direct impact on the price of gold, its basic supply and demand. With such large, consistent buyers in the market, the price of gold is pushed higher. This has a ripple effect. It makes gold more expensive for everyone, from jewelry makers to tech companies that use it in electronics, and of course, for individual investors. We're seeing gold prices hit new highs, and this central bank buying spree is a major contributing factor. It's a clear signal that big money is flowing into this ancient asset, fundamentally changing its market dynamics. Now, for the question you've all been waiting for. What does this mean for you, the ordinary person? First, it's a wake-up call. The actions of central banks are like a giant billboard flashing. Warning, economic uncertainty ahead. It's a reminder to take a look at your own finances. Are you prepared for potential volatility? Do you have an emergency fund? Are your investments diversified? You don't have to be a financial expert, but understanding the big picture can help you make smarter decisions. This trend also puts a spotlight on gold as a potential part of a personal investment strategy. Now, this isn't financial advice, and it's crucial to do your own research or consult a professional. But historically, a small allocation to gold has helped portfolios weather economic downturns. When stocks and bonds are struggling, gold often moves in the opposite direction. Seeing central banks do this on a grand scale might make you consider if a similar, smaller scale strategy makes sense for your own savings. It's about seeking the same stability and protection that the big players are. In conclusion, this global gold rush by central banks is more than just a financial headline. It's a story about fear, power, and the search for stability in an increasingly uncertain world. It has a vote of no confidence in the current financial system and a massive bet on an asset that has stood the test of time. For us, it's a powerful signal from the world's financial insiders. It tells us that the economic landscape is shifting and that preparing for volatility is not just wise, it's essential. The golden rule, it seems, is more relevant than ever. In times of doubt, trust in something tangible. Thank you so much for joining me on this deep dive into the world of central banking and gold. If you found this video insightful and want to learn more about the economic forces shaping our world, please hit that like button and subscribe to the channel. Don't forget to ring the notification bell so you won't miss our next video. What are your thoughts on this trend? Let me know in the comments below. Stay curious, and I'll see you in the next one.